In this video, I will be performing a full multi-time frame technical analysis breakdown, but not only technical analysis. In fact, we will also check what we have from a COT perspective, so commitment of traders, what the biggest banks and institutions are currently doing in the market. And by the end of the video, I will also show you exactly how we can be looking for a potential capitalizing opportunity on the pair that we're actually analyzing. Now, if you're new to the channel, I'm a top author on the TradingView platform and I share free education and analysis on all my platforms daily. So I suggest you subscribe to the channel and I will see you in the video. Okay, so the pair that I want to speak about today is EURJPY because it is a very interesting pair to follow at the moment for a potential trading opportunity. So during the analysis, I will show you exactly where is the best zone to be looking for a potential trading opportunity, and also I will try to keep the analysis as usual, as educational as possible, so that you will understand exactly which are the key aspects that you have to follow when you're actually analyzing the market for a potential trading opportunity. So let's start here from the monthly time frame. Now on the monthly, what we can see is that EURJPY has and is creating this W formation. Specifically, the area that the market rejected is this extremely strong support. In fact, this area was acting as support here, preceding all this move to the upside, and the market again respected this level here as new support, starting this move to the upside. And again, obviously we expected the market to make this move to the upside. In fact, in the previous analysis that we made on EURJPY, what did we say? We said after the creation of this candle like this, we want to see the next monthly candle fill in this wick. And this is just a general thing, okay? Every time that you see a candle like this, okay, green with a very long wick, what you expect is the market to fill in this wick. Now, why is that? Okay, first of all, I made a complete video speaking about this pattern, and I also said it in the previous analysis before the market actually created this bullish move, that we had a high probability of having this bullish move. But why is it that this candle is a candle that we expect the next one to fill in the wick? Because this wick on lower time frames will simply be a retracement. In fact, if we go down on the weekly time frame, what do we have? We have a market that created a clear impulse, the correction, which is the wick that we see on the monthly time frame, and then from here we expected the continuation to the upside. And in fact, in my previous analysis here on YouTube, what did I say? I said that from here we definitely wanted to see the continuation to the upside of EURJPY. And what kind of situation we have at the moment? Now, as usual, if you have an impulse in the market, if you want to measure the correction, what are you supposed to be doing? You're supposed to be taking your Fibonacci from the low to the high of the impulse. So in this case, from this low to this high. And what you can see that clearly the market was moving by steps. In fact, the market had first rejected the 50%, broke to the upside, tested and rejected the 0.382, and after that you definitely expect the move to the upside. And in fact, that is exactly what we said in our previous video. We said the market is moving by steps, we definitely want to see the move to the upside. So currently the market has made the move to the upside, and where is the market as we are speaking? It is exactly at the previous resistance, which was obviously resistance here, and we expect it to be again resistance at this area. Plus, what did the market create? It created this move to the downside, retracement to the upside, tried to go lower, and then made the move to the upside. Therefore, we have a W formation on the weekly, testing the previous weekly high. Very important to say, because as we said on the monthly we have this W formation, okay, which is a bearish pattern, and on the weekly we have a W formation retesting the previous high, which is again a bearish pattern. Therefore, we can definitely expect the market to give us a retracement to the downside. But before we understand where we can be looking for an opportunity, let's first complete our analysis. So check also what we have on the daily and also check what we have from an order flow perspective.
Just a quick reminder, make sure you comment below and you let me know which pair or topic you would like me to cover or analyze in the next video.
So here on the daily, what do we have? Now, if you remember in our previous analysis, which by the way, I will link in the description so that you can go and check out what we wanted to see happening on EURJPY and all the reasons. So obviously more free education. What did we say in our previous analysis? We said we wanted to see the break above the structure, retest and continuation to the upside, which is exactly what the market has done. Broken above the structure, and now the market is continuing the move to the upside. However, this brings a problem because this move to the upside is very, very impulsive and there is absolutely no deceleration or exhaustion at this level yet. Therefore, looking for a short on a market that on the daily is absolutely bullish is definitely not a good idea, because you would be shorting clearly a bullish trend, therefore is not something that we want to be doing. Now, before I show you how we will be approaching this situation, so a situation where on the monthly and weekly time frame you have bearish patterns, however on the daily you have an extremely bullish market. Before I show you how we will be approaching this situation with students, let's first go and give a check at what we have from a COT perspective on the euro and on the JPY. So what the big banks and institutions are currently doing on the two currencies to see where can we trade with them, okay, to gain an advantage over our competitors in the market. So let's start from the euro. Now, from a euro perspective, what we can see is that we went from minus 114k net positions. So from a situation where we had way more shorts than longs, with 271k shorts and 157k longs, all the way up to a situation where we have way more longs than shorts, with 190k longs and only 72k shorts. And now the euro is still pretty bullish with 110k net positions at 32% long exposure and 194k longs, which is the highest level that we had in quite a lot of time. Now, if we go and see what we have from a JPY point of view on the other side, we can see that the JPY in the long term has been getting bullish. However, in the short term, institutions have been selling the JPY. In fact, all JPY pairs have been making moves to the upside, because obviously institutions have been selling it and net positions were decreasing from 34 to 18k. So definitely JPY getting a bearish, euro bullish. Therefore, EURJPY making the move to the upside exactly as we wanted to see. However, as you can clearly see also from a COT perspective, it's still too premature to be looking for any kind of shorts on EURJPY. In fact, if we check what we have on the 4-hour time frame, what we can see that on the 4 hours as well, everything is absolutely bullish. Okay, there is no sign of weakness. The market is just moving to the upside, and until the market will remain as it is right now, we cannot be looking for any shorts, and we will not be looking for any shorts with students, because everything is all bullish. The market has been creating higher highs and higher lows. However, okay, things might change, because clearly we are at a very strong supply area that has preceded all this move to the downside. So things might change. The market might decelerate here and actually shift to a bearish market from a 4-hour perspective, because always remember, monthly, weekly and daily time frame are the best time frames for the direction of the market, but the best time frame for entry is the 4-hour time frame. So with students, what we will be doing is monitoring price action on the 4-hour time frame inside of this area, waiting for the market to shift from a bullish market as it is right now to a bearish market. And if the market will actually shift from a bullish to a bearish market, at that point, what we will be doing with students, we will be adding EURJPY on watch list, and as soon as the market will provide to us one of our valid entries, we will be taking a nice short with a good risk to reward and good probabilities for the completion of the weekly W formation at the neckline, which is also the structure that we have here on the daily, because in all of this move to the upside, there is one candle which is not related to remove therefore a structure candle, which is exactly this red candle here, at which we expect the market to make the correction to actually complete the pattern on the weekly. But if everything will remain as it is right now, we cannot be looking for any shorts. Okay, if the market will just continue to the upside, we will simply have to wait for a break back below the structure, and then we can be looking for the short. So also a deceleration above this zone is anyway fine. Okay, we just need to see a deceleration, no matter if it will happen here, here, or here. We need to see a deceleration on the 4 hours and a shift to a bearish market before we can consider any shorts.
If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free analysis and education for all of you. Also, make sure you click the link in description, because you will find the best program out there. So the mentorship program, which is structured in the best way possible, because first you learn all the rules of my rule-based strategies, and then you trade them live with me each and every day. I give you a new daily market breakdown showing you exactly how to apply the strategies with entry, stop, and take profit, as well as answering every single question that you have every day. So I really suggest you go and check it out, or I will see you in the next video.